You know, you and I were just remarking how busy it's been here. Why do you feel it's so much busier this year than on CERAWeek by S&P Global in the past?
Yeah, well, I think it's just energy's back in everybody's conversation. It is the thing we took for granted. We expected when we pulled up to the pumps, the gas price would be reasonable. And when we fired up our furnace, the natural gas price would be good. And when we flipped on the switch, the lights would come on. And I think the last couple of years have reminded us that energy is not something to take for granted. It's something we need to be very thoughtful about.
Resurging interest, of course, in nuclear energy. Is that driving up the demand? How is it driving up the demand for uranium?
Well, in a couple of ways. I mean, if we think about the first big energy reminder in the nuclear industry, it was the Russian invasion of Ukraine, which upset the fuel markets. And you had a number of customers, Eastern, Central Europe, really wanted to de-risk from Russian supply of fuel. So that immediately led to a fuel supply interest in nuclear. But now with the Iran conflict, you have a reminder that if the world's going to rely upon things like gas, there's going to be volatility to it. So nuclear's characteristics, it's base load, it's 24-hour, it's carbon free, and it's very secure and robust, and it's not reliant upon a gas pipeline that's coming to the plant today or coal trains that are coming to the plant. It's very hardened electricity, and those characteristics are being revalued and repriced, and that's being reflected in just a strong demand for nuclear.
Do you see uranium prices hitting the highs they hit 2 years ago?
Well, we do. We think that despite the fact that we haven't been at replacement rate contracting in uranium, which is the notion that utilities who almost exclusively buy forward under term contracts, on an annual basis, they have not been buying new material to replace what they've been consuming off old contracts, which means by definition, they're below replacement rate. They haven't been at replacement rate since 2012. And despite that, we're already at $90 US uranium. It's very interesting to think we're at prices that we've only ever discovered on the back end of a big contracting cycle, never on the front end. So it feels pretty constructive. It just reflects that while there is uranium out there, you need a strong enough price in order to be incented to go get it as a producer. And right now, we're just not quite seeing those prices yet, but they feel like they're coming. The demand is building.
Your company owns 49% of Westinghouse. The company is expected to benefit from an $80 billion US-Japan deal. That was announced in October. We haven't really gotten any specific details on this. So can you bring us up to date?
Sure can. A lot of momentum since that deal was signed. A couple of things, a couple of big projects to think about under it. Number one is part of the strategic partnership was a recognition that if you want utilities to start building, you have to give them confidence in things like the supply chain. They have to know they're not taking on the risk of restarting a global supply chain all on their own. So as part of this package was a desire to order long lead items ahead of time, just really stimulate that global supply chain with a big enough order, not just 2 reactors, but say for 10 reactors. The second is a project to identify where these reactors are going to be and the financial model they're going to be built under. And then the third is, what is the financing going to look like as the U.S. and Japan work together on energy investments? So this wasn't just an announcement and then people went away and did other things. There's a lot of momentum to it. And in nuclear terms, things are moving quickly. These are big, complicated deals, and a lot of attention is being paid to it.
When you talk about long lead time for supplies, is anything being interrupted because what we're seeing in the Middle East?
At the moment, no. So the Middle East wouldn't have been a big provider of any of the long lead time items in the nuclear island part of our reactors. It really is just a matter of stimulating the supply chain with Western demand for a fleet build model to be deployed in the United States, perhaps in Canada, but then in countries like Poland, Slovakia, Slovenia, Bulgaria. It's a pretty exciting time.
Now, do you expect more long-term contracts this year following that blockbuster agreement struck between Canada and India last month?
Yeah, the uranium demand is picking up. More customers, be they countries or utilities, understand they need to lock up more of their forward demand for uranium. So we are seeing long-term contracting build towards that replacement rate level that we spoke about earlier. So I think something like India coming along and signing a big deal with Cameco, but also signing a big deal with our big competitor, Kazatomprom, the state-owned enterprise in Kazakhstan. Just means more supply is being diverted from Western fuel buyers, and they're going to have to get more active and secure more uranium under long-term contract, and that's good for uranium price discovery.
What impact will NexGen's Rook project have on the uranium market? We're talking about how everything is affecting it. What impact do you think that will have?
Well, it depends. There is a great project. It's a great deposit in the ground on the west side of the Athabasca Basin in Saskatchewan. It's a part of the basin that hasn't produced uranium for decades. It's not infrastructure rich, so a lot of infrastructure has to be put in. But ultimately, uranium is a very special commodity in that there is no fundamental in-year demand for uranium. There isn't a reactor on the planet loading a fuel bundle in the next 12 months that needs uranium in the next 12 months. They've already procured it. So we've given the blueprint to the world of how you bring on big supply. You bring it on in a long-term contract portfolio that you've built. And if you do that and you do it well, there's no impact. The material is spoken for. It doesn't hit the spot market. It goes into existing contracts, and then you continue to contract forward. So it need not be negative if it's marketed properly.
Appreciate your time. Thank you so much.
Thank you.